Hello, everybody. Welcome back to the Link platform. We are so excited to have you back as we continue our conversation on investing in bonds. Today, we're going to be looking through the RSA Retail Savings Bonds website, just navigating the platform. How does it work and what information is available on there? And then towards the end of the video, we're going to look at how the returns are being calculated on these bonds. Remember, like we said in the previous bond video, we are looking to lock in this high level of interest rates. We saw that inflation is actually starting to moderate, and this is around the time where the SARB is going to be debating whether they're going to keep interest rates at the same level or whether they're going to start reducing them. So the aim for us is just to invest in bonds at a time where interest rates are high so that we can lock in this high level of returns. If you would like to find out more about how RSA retail savings bonds work, please continue watching this video. Before we go ahead and navigate the RSA Retail Savings Bonds website, I would recommend that you go down in the description box below and click on the link so that you can follow along with us. Okay, so on this page we have the landing page. So once you click on the link, this is the page that you will arrive to. If you scroll down, you will see a lot of information right off the bat. So you have the current interest rates that are available on the three different products that we mentioned in the previous bond video. You have the 2-year fixed rate on the fixed rate bonds of 9%. This is currently the lowest interest rate that you can earn. And then you have the 3-year fixed rate, 9.25, and then you have the 5-year fixed rate, which is currently the highest rate that you can earn of 10.5%. If you go ahead and look at the inflation-linked bonds, you have the 3 available options for the 3-year bond, the 5-year bond, and the 10-year bond at the different interest rates. Remember, the inflation-linked bonds is linked to inflation rates, so this is not the total return. You want to look at the inflation around the time that you invested plus this fixed rate, and that gives you what the total return is going to be during the time of your investment. We will have a look later on in the video at the bond calculator to see how the returns are calculated and what you can potentially earn. And then if you look at the top-up bond rates, these bonds, remember, are for a 3-year period. Top-up bonds only have one term, which is 3 years, and this is the interest rate that you would be earning if you had invested in top-up bonds. Like I said, I recommend the 5-year fixed rate because that is the highest one, and that's the one I have invested in, because you do lock in this high level of interest rates even during a period where you are seeing inflation moderating. And if you don't have that same amount of time to be investing in this, like 5 years is too long a time frame, the second recommendation for me would be the RSA top-up bonds. Like I said in the previous video, it is the most flexible option available here, and as you can see, this rate is much higher than the 3-year fixed rate, 9.75%. so I would recommend these two, but if you're not comfortable, obviously you can evaluate whether these other options are the best suited for you. Okay, then we look at the about page. The about page tells you more information, but all this information we have actually covered in our previous bond video. If you haven't seen it, I will link it in the top section. It tells you the 3 different bonds that are available, and then if you go to overview, you go to products, you will see more information about each of the 3 products that are on offer. There are just a few things that I would highlight here, but I would highly recommend that you read all of the information and all of the terms and conditions that are available for you on the website before investing. This is the restart option. So this is what I want to highlight specifically for fixed rate retail savings bonds, that after a period of 12 months, after you have invested for a period of 12 months, you do have the option to restart your investment if you find that at that time, the interest that is available on this website is much higher than what you're presently earning on your current investment. What is important to note about the restart option is if say you're investing in the 3-year fixed rate bond and you elect to restart your investment, you are going to be restarting the term of your investment. So you will start again the 3-year period from scratch on the date that you elect to restart. But it is a very good option, and actually quite comforting to know that this is available, that if interest rates are much higher than what you invested in, there is another opportunity for you to lock in much higher interest rates in future. And then if you scroll to the bottom, there is the withdrawal sort of terms and conditions that are available here, and it tells you how to withdraw, and it tells you that if after a period of time you want to make an early withdrawal, so before the expiry of your investment term, it tells you what penalties are applicable and how much those penalties are going to be and how those penalties are going to be calculated. So I do recommend that you read the section. The withdrawal section is the same for all 3 products on offer, and actually all these options that have drop down menus are exactly identical for all the options that are on offer. Okay, then we go to inflation linked retail savings bonds. This tells you how it works, right? It tells you have 3-year, 5-year, and 10-year terms, and then it tells you how the capital adjustments are made in line with the inflation rates over the period of your investment, and then it tells you how these returns are going to be calculated. We will look at the calculator in more detail just to give you an example of how this works. Okay, and then we have the RSA retail savings top-up bonds, and what I want to highlight on this page is that you have an option to switch. So if you elect the 3-year top-up bond, which is the only top-up bond that is available, and you start investing with 500 rands, then what you can do is maybe on a monthly basis, or as and when you have any extra money, you can top up that investment. So you can add to the same pot, and then until you get to a point where you have 1,000 rand. Once you reach 1,000 rand, you will have the option to switch from top-up bonds to either fixed rate bonds or to inflation linked bonds. So it's actually quite cool that if you don't have that 1,000 rand right now, you can actually start working towards getting it while you're locking in a high level of interest rate, as we have seen they are offering 9.75%, which is very, very attractive. You also have the option to retain the top-up bond pot. So what you can do is keep topping up until you reach an amount of 1,250 rands. Then once you get there, you can withdraw the 1,000 rand and put it in and switch it over to the top-up bond. Switch it over to the inflation-linked bond or to the fixed rate bond, and then keep your 250 invested in your top-up bond, and then start and keep building it up from there. So this is a very interesting option that's available for you if you don't have 1,000 rand, or if you currently have other plans but want to start locking in those interest rates. And the reason why the switching option is actually very attractive is there is another strategy that you can use. So if you look at fixed rate bonds and inflation linked bonds, you don't have the ability to top up in the same pot, right? So what that means is if you invest 1,000 rand and we only have 1,000 rand today, you invest that 1,000 rand and you earn interest on that. The next time you have another 1,000 rand and you want to put it in fixed link bonds, you can't put it into the same pot. You have to keep them as separate investments. Now, it might not sound like it matters to you, but it actually matters, because the interest that you earn on 2 separate 1,000 rands is much lower than the interest that you earn on 2,000 rands. I hope that makes sense. I will try to demonstrate that in the calculations that we will do later on. Okay, so that's it on the different products and the different terms and conditions. Let's go to the calculator. So we will start with the fixed rate calculator. Remember, on the first page we saw what different rates are applicable for the different investment terms. So we are going to simulate what your returns are going to look like if you invest 1,000 rand and then you choose the option to reinvest that interest rate, right? So we're going to calculate that. We're going to calculate. Okay, so then it will show us the calculation for all 3 terms that are available. So if you scroll down here, you initially invested 1,000 Rand and you invested for 2 years. At the end of your investment, you're going to get a return of 193 Rand. If you invested 1,000 Rand, if you invested for 3 years, you get slightly higher than that. If you invested for 5 years, you get slightly higher than that. And this is the calculation, and it shows you like the dates on which you're going to be receiving the interest and how much is going to be at each period of time. If you decide to receive the interest on a semi-annual basis, the return is going to look slightly different. And what's going to happen is, because you won't be earning interest on interest, the return is going to be much lower than it would be if you elected to reinvest your interest. But at the end of your investment term, you get your 1,000 Rand, because on a semi-annual basis, they are going to be giving your interest into your bank account. Okay, let's actually demonstrate this in numbers. Okay, so you elect to receive your interest on a semi-annual basis. At the end of your 2-year term, you're going to be receiving your 1,000 Rand in capital, and during your investment, you're going to be receiving all these different amounts in your bank account as interest. If you add up all these different amounts, if you elect to receive them on a monthly basis, this interest adds up to 180 Rand. Let's go back to the reinvest interest option. And automatically you can see in the 2-year option, you are getting 193 Rand if you elect to reinvest. There is a 10 Rand difference there. Let's see how big this looks when you are investing a much bigger amount. So we're going to say 10,000 Rands and we're going to calculate. You will see that if you invest 10,000 Rands, you are going to be getting 1,930 Rands of interest at the end of your investment term if you elect to reinvest your interest and you choose the 2-year fixed bond. What about if you actually choose to receive your interest on a semi-annual basis? Again, because we have chosen a very easy example, we just added a 0 at the end of the 1,000 Rand. Instead of the difference being 10 Rand, the difference is now 129 Rand. So that does add up. So electing to reinvest your interest is very, very important if you want to be earning interest on the interest earned. Okay, let's move on to the top up estimation calculator. That is for the top up bonds. When you click on that, it downloads in Excel that will open now. Okay, so this is the calculator for the RSA retail savings top up bonds. Remember, we need to change that. We saw that current interest rates are at 9.75 and the initial investment is 500 Rand. So what happens if you invest 500 Rand for a period of 3 years and you elect not to top up on a monthly basis? You will be receiving at the end of your 3-year period 669 Rand, and the interest that you would have earned on that is going to be 169 Rand. This is the calculator and how it works, and the interest that will be accruing to you on a monthly basis. Okay, now let's have a look at if you decide to top up with the minimum amount of 100 Rand. What does that look like after a period of 3 years? You'll see that it easily builds up, and the amount is significantly higher than it is if you do not top up. You would have contributed 4,100 Rand by the end of your 3-year term, and you would have earned interest of 765 Rand. So that would be actually really good. With just a small top up can go a very long way. What happens if you top up with 200 Rands? Again, as you can see, the interest really builds up really quickly, and that is what we are talking about when we talk about compound interest. So the interest is no longer going to be 700 Rand when you're topping up with 100 Rand. It is now 1,300 Rand if you top up with 200 Rand, and it just builds up and builds up. The more you invest, the more interest you earn. If we go back to the website and have a look at the inflation linked calculator, what it does is it opens up another page. This is an explanation of how the inflation returns, how the inflation adjusted returns are calculated on your inflation linked bonds. It shows you that if you look at your capital investment, so let's say you invested 10,000 Rand, that 10,000 Rand is going to be adjusted for inflation by looking at where the inflation index is at the time of the calculation for your capital adjustment, which is going to be the same time for when your interest return is going to be calculated. That is on a semi-annual basis that happens every 6 months. And then they're going to look at where the inflation rate was at the time that you invested. So the inflation at the time that they calculate and the inflation at the inception of your investment is used to calculate an adjustment, a capital adjustment for inflation. So if you invested 10,000 Rand, they are going to adjust that by the inflation index, and your capital amount will now be 10,138 Rand. From there, they are going to calculate your interest on this 10,138 Rand. So even though you invested 10,000 Rand, they will be calculating interest on the 10,138 Rand. And I'm going to be using a calculator on Excel to demonstrate how that works. Okay, so I built this calculator on Excel for the purpose of this video. So it's just literally a hypothetical example, okay? So let's say, for example, you choose to invest on the 3-year bond, the 3-year inflation-linked bond, and as we've seen on the website, the interest that accrues on that is 4.5%. And let's say you start investing on the 30th of September. And then the base rate CPI that I have used is 110 points, 110.8 points that I've used. And this is just the July CPI that I'm using as a hypothetical example. And let's say hypothetically you are in an environment where inflation is increasing and your CPI is increasing by 1 point every sort of 3 months or every sort of 6 months, right? It's just a hypothetical example. Obviously, nobody can predict how your CPI is going to go. But you invested on the 30th of September, and by the 30th of November, that is going to be the first date on which they're going to be calculating your inflation-adjusted returns, okay? So your base rate is 110.8, and then your index on the day that the interest is calculated is 111.8 points. What they're going to do is calculate your inflation adjusted capital amount. So that is going to be, like they've said in the website, what the index is telling you divided by the base rate, and they're going to multiply that by your initial investment. And what you get then is a capital adjusted amount of 1,009 Rands. And then over and above that, what they're going to do is calculate interest at the fixed rate of 4.5%. They're going to calculate that on your inflation adjusted amount. And for a 3-month period, your interest is going to be 7.57 Rand, right? And the interesting thing is, what is actually the nominal return that you're going to be getting over that period of time? And you'll see it is slightly higher than what you would have gotten than the real rate. It's slightly higher than the real rate because the real rate is 4.5, but the actual rate that you get over your 1,000 Rand is 4.54%, so slightly higher. So that is what an inflation adjusted interest rate looks like. We call it a nominal interest rate. And then you do that for the rest of your investment term, and like we said, it's for a period of 3 years. So you do get 6 semi-annual interest rates. And at the end of your investment, on the date of maturity, you're going to be getting your last 3 months worth of interest, because remember, you invested on the 30th of September, so you only had 3 months until the time that they calculated that semi-annual interest. So towards the end, you're going to get your last 3 months. And then in your bank account, what you're going to be getting is 1,079 rands. But remember, like I explained in the previous bond video, what happens on inflation-linked bonds is that on a semi-annual basis, they send you your interest. So the total interest that you would have earned on this investment of 1,000 rand over a 3-year period with 4.5% real rate return is going to be 203 rand. And the reason for that is because you're not earning interest on interest. The interest that you earned in this first period is not going to be accruing any interest, because it's going to be paid into your bank account. We can use another example. So let's say you invest 1,000 rand over a 3-year period at 4.5% real interest rate returns. But what happens is you are actually in a decreasing inflation environment. So you're going to click decreasing here. Then it's going to recalculate quickly. So the return that you will be getting on a decreasing inflation environment is going to be 66 rand. So that is a tiny bit lower than the 200 rand that you will be getting in an increasing inflation environment. Now, obviously, this is a very extreme example, because it is very unlikely that you're going to have a decreasing inflation environment for a consistent 3-year period. So it's just hypothetical, but it is to highlight to you that there is that risk in the inflation-linked bonds that for some periods of time you're going to be having an increasing inflation environment, and so that is going to be boosting your returns. But if for any reason you have a deflation environment where your inflation rate turns negative, you could actually have lower returns than what you would have thought you would at the inception of your investment. We haven't had something like that, and it's probably like the probability of that happening is low, but it is a risk that exists that you need to be aware of when you are investing in inflation-linked bonds. They are very, very good because you do get inflation-adjusted returns, which means your money doesn't get chowed by inflation. Instead, you get 4.5% real interest rate over and above the impact of inflation that is happening. So that is that's a very good investment if you are looking for inflation protection in this environment. That is all we have for you today on this follow-up bond video. If you are interested in other terms and conditions, please remember to go back onto the website and read all the documents that are available and all the information that you can get. We hope that this was very, very helpful and that you are able to choose which product suits you the best. If you have any questions, please remember to comment down below. If you enjoyed this video, please give us a thumbs up, share with your friends, and subscribe to our channel. Thank you so much for watching. Have an amazing day. Bye.